Thank you for joining us. This is Business Incorporated coming to you live from Lagos. I'm Chimezi Obi Iwawo. Coming up on the program, the International Monetary Fund evaluates Ghana's fiscal outlook for the rest of 2016, considers the third review of the country's $980 million assistance program. A claimant to the chairmanship of Libya's $67 billion sovereign fund denounces the appointment by the country's United Nations-backed government. Plus, South Africa's ArcelorMittal agrees to pay a record R1.5 billion fine for colluding to fix steel prices. Well, we'll begin here in Africa, where the International Monetary Fund is evaluating Ghana's fiscal outlook for the rest of 2016 and will consider the third review of the country's $980 million assistance program next month, subject to the outcome. Now, Ghana, which exports cocoa, gold and oil, signed the three-year aid deal in April last year to bring down budget deficits, inflation and a high public debt. The government had expected the executive board to conclude the third review in June to enable it to receive a fourth disbursement of around $115 million imbalance of payment support. The West African economy has agreed remedial measures, including financial and institutional reforms, to cut spending and spur growth. Finance Minister Seth Terkper said last week the IMF deal was yielding positive results and that Ghana was on target to halve its fiscal deficit this year. An claimant to the chairmanship of Libya's $67 billion sovereign fund has denounced the appointment by the country's United Nations-backed government of a panel to run the fund, saying he had not been formally asked to step down. Last week, the government of National Accord appointed a 5-member caretaker committee to run the Libyan Investment Authority. The announcement was welcomed by Western governments, but it did not list Abdelmajid Braish against the panel members. The GNA was designed to resolve a conflict that flared up in 2014 when an armed alliance took control of institutions in Tripoli and the newly elected parliament relocated to the east. The hope was that it would reunify institutions such as the Central Bank and the LIA, but opposition to the GNA continues, with the parliament in the east of Libya voting on Monday against the motion of confidence in the Tripoli-based administration. And to global markets now, beginning from Europe, quite a lot to chew there as markets react to the Eurozone PMI data. Let's bring in my colleague there, DWTV Channels TV financial correspondent Javier Arguedas, to talk to us. Good afternoon, Javier. Very nice to have you back again from Berlin. Well, let's begin with a meeting of the EU Big Three. German Chancellor Angela Merkel and her colleagues from France and Italy, Hollande and Renzi, met yesterday to discuss EU's post-Brexit future. What is the outcome of that meeting?
Well, the outcome of that meeting was not really that practical. We wouldn't say that we saw any concrete measures, at least not from an economic perspective, but it was very important as a message of unity, as a political message as well, that the countries are trying to work together in order to keep the European Union and to keep the principles that are behind it. What we saw is specifically are plans in order to make the political stability in the European Union a priority. They do not want to see a divided union, of course, and that is perhaps the biggest threat also from an economic perspective. There will be a meeting between the EU countries without the United Kingdom to discuss the economic future, but that is going to be further down the track. Until then, what they were specifically discussing was also how to combat the extremism that we have been seeing, the polarized societies that might cause political unrest, that, as we know, is one of very few elements that can actually threaten the complete European Union and the economic stability behind it.
Now, Javier, while these big three are busy discussing the post-Brexit issues, the Eurozone PMI just released beats estimate at 53.3. Well, we've seen Germany lagging behind there. Now, which other countries are driving the manufacturing data, and how is this data affecting stock movement today?
Well, perhaps the most important reaction here is the fact that many thought the Brexit vote would affect the industrial production and the economies in general far more than what we're actually seeing. So there is a little bit of relief there. Perhaps the most interesting, if perhaps not driving, but more interesting data here was the Purchasing Managers Index for France, specifically for the service sector, which came in far better than expected. And this shows us that the economy in France might be on the way of a recovery. We might see a growth in the GDP that is more solid, and as we know, France has been one of the big headaches of the economies of the Eurozone because it had a rough time picking up pace. So that might be perhaps the best news that we've heard regarding that industrial production. And also what is very important is that the private sector came in at a 10-month high in another index that was published today, also in France. So all in all, perspectives seem to be quite positive, but of course we will have to wait to see the next published results in order to assess how the economy is really going in France.
Now, another country in the news today is actually Turkey, talking about its monetary policy easing cycle, which of course being discussed. The central bank is expected to meet today. Are investors expecting this easing cycle to continue or not?
Yes, investors are counting on some type of easing or at least some type of stimulus measure because, of course, the situation in Turkey right now is quite critical. But see, the problem with this easing, and it doesn't matter if we're talking about Turkey or the European Union or the United States, is that it often doesn't let us see the problems that are behind it and that are truly affecting the economy. In the case of Turkey, of course, we have two critical issues. The first one is the political unrest that we've seen, even though the government is taking quite harsh measures. Of course, it doesn't speak very well for the country as an investment destination if you see that there are things like a coup attempt. So that definitely causes insecurity for investors, and that is driving capitals away. And the other very important problem is that one of the backbones of the economy of the country, which is tourism, has been heavily affected, and no easing will make that significantly better. It might make Turkey a little bit more attractive to investments, of course, but it's not going to solve the core problems of the economy. So yes, it is true that we will see some action by the government in order to make things better for the economy, but of course the only way to truly recover and to truly make a solid case for the economy in Turkey is if those core problems, the political unrest and therefore the security for tourists as well as a backbone of the economy, are truly solved.
All right, thank you very much, Javier, there. Thank you for your time. Well, and in the U.S., the markets are gearing up to begin today's trading. However, trading started the week on a positive note. On Monday, VOA Channels TV financial correspondent Jill Malandrino gives us details.
NASDAQ market site, I'm Jill Malandrino. U.S. stocks open relatively flat to kick off the trading week. The NASDAQ just a bit in the green. Actually, you know what? The other two indices just went green as well. This is on top of not much economic data or earnings reports expected today. Markets took a breather last week as the major averages consolidated a bit following recent gains and new all-time highs in the S&P 500, Dow Jones, and NASDAQ. Oil prices, meanwhile, fell as analysts said they doubted upcoming producer talks would rein in oversupply. M&A news is in the spotlight this morning. It was very active over the weekend with top news stories including Pfizer nearing a deal to buy Medivation, and it got a healthy premium for as it looks to build up its oncology portfolio. ChemChina winning CFIUS approval for Syngenta acquisition, and Renesas said to be in talks to buy Intersil. So those are three big deals that we are looking at today. Volume and action otherwise should be relatively quiet through the Labor Day holiday, with one of the most popular U.S. vacation periods on the annual calendar. now upon us. In addition, the earnings reporting season is essentially over, so there will be little in terms of corporate news. As such, attention turns back to monetary policy here in the States. The Kansas City Federal Reserve Bank hosted an annual monetary policy symposium discussing designing resilient monetary policy frameworks for the future. This is what we call Jackson Hole. It happens once a year at the end of August in Jackson Hole, Wyoming. It's going to take place on Thursday and Friday. This event is closely watched by market participants because it attracts high-profile global audience members, including central bankers and policymakers, including Federal Reserve Chairman Janet Yellen. She's going to hold her conference on 11 a.m. Eastern Time on Friday. Now, this is why Jackson Hole is important to traders. The speeches are analyzed in depth, and headlines can and will move the markets, particularly the financial sector and commodities, because they are sensitive to swings in the U.S. dollar. Investors will examine Yellen's remarks to gauge the likelihood of a rate hike here in the States in September.